I can point to 6 stocks that in the last 3 months have delivered gains to their shareholders of 50 to 500%.
Right.
So it's a cyclical business. We've come off the bottom.
Hello there, my friends. Chris Marcus here with you for the StockPulse Network today. Really excited to have Rob McEwen of McEwen Mining, obviously an expert in the gold industry, and great to have you here today. And wondering if you could give folks an update of what's going on in the gold industry, where we stand, and of course some of the exciting projects you're working on.
Thank you, Chris. Happy to be here. Sure, I'll jump into gold. I think we're at the beginning, or we're at the early stages of a bull market in gold, and it'll probably go for the next 9 years. And I say that because if you look at the last 8 bear markets over the last 77 years, the one we just came out of was the longest and deepest of all the bear markets the last 77 years. So the downside risk I see is low of entering at this point. And the bull market started, I believe, the beginning of January of 2016.
Right.
And we're already, gold is outperforming the Dow, the S&P. Our own stock, we're up over 100% since the beginning of 16, as opposed to the S&P being up 32 and the Dow being up 45. And we're not unique. There are other gold companies doing that. And if I want to see some other signs, I can point to 6 stocks that in the last 3 months have delivered gains to their shareholders of 50 to 500%.
Right.
So it's a cyclical business. We've come off the bottom, the risk is low, and the upside is you got a 67% chance of a 3x from here.
Right. We talked a little before we started about how, especially now, there's a lot of focus on the stock market, the tech stocks, and in many cases, I think people aren't aware of what's going on in the gold space. And anything you could comment there, just in terms of some of the opportunities that might be coming up, that why people would be well served to look into gold now?
They're relatively cheap. One thing, when the gold market fell, you lose all your liquidity in the market. So any new interest coming in is moving stocks up at a higher level. There's a reasonable short position in the golds. So that adds fuel to the fire when you're buying. The shorts have to cover. And the broad market, everybody's looking at the world and saying, everything's okay.
Right.
We don't have to worry about this. The government's got it in control. But if you look around the world, there are currencies dropping out of the sky against the dollar. And that is telling you there's something wrong in their economies.
Right.
And eventually those that get large enough that they have an impact on the big market. And that's when gold becomes a safe haven. Right now, no one needs a safe haven or feels they need a safe haven. But it's coming. So why not rotate out some of your profits, buy a neglected sector of the market like a contrarian would do, and you've got, I think you're going to see more M&A activity in this space, and you're going to see people starting to pay attention to drill results.
Right.
As I said, those 6 companies that were up 50 to 500%, if they'd put out their drill results 6 months earlier, there would have been no response at all.
Right.
And here you're seeing very positive response to that news, and you're going to see more of that.
Yeah, it does seem like the environment is changing a bit, whether that's the rising interest rates or seeing real estate slow down, some of the stock markets slow down. And certainly if we're adhering to the strategy of buying low and selling high, a lot of the stock markets since 2009 have tripled or more versus gold up about 50%. So like you said, it sure seems like a good time to be looking into what some of the gold companies are doing.
Absolutely.
And in particular, McEwen Mining, you mentioned before we started, which I'd love for you to share with the audience, how you approach that yourself. And obviously there's a lot of compensation models in the financial industry, but you're really a believer and your actions back up how you feel about your company, which I think is a good thing for investors.
Yes, well, when I was building Gold Corp, I was the largest individual shareholder of Gold Corp. And I thought after I left Gold Corp, I mean, we'd had a great run. Our share price over the last 13 years I was running compounded at better than 31% a year for 13 years. So all of our shareholders did really well. And I thought, I'd like to enhance that model, and so I've decided that I'd be an investor, and the only way I was going to make money is the same way my share owners do.
Right.
So I have, my investment in the company is $160 million. That's my cost. I have a salary of $1 a year.
Right.
I said I don't want any options, I don't want any bonuses, and I'm going to make money exactly the same way as all of my shareholders do, through a higher share price.
Right.
It also gives you a financial discipline. You say, well, I don't want to sell a royalty or a metal stream that would give away part of my future revenue and reduce my operating margins. I'm not going to listen to every investment banker that comes by and says, you should do an issue right now because they want to earn a commission.
Right.
And a lot of the industry has done that. So that's the financial discipline. I own 24% of the company. My goal is to get into the S&P 500, and 99% of all the precious metal producers in the world can't get into the S&P 500 because they're not American companies. We're a Colorado incorporated company. There's one gold stock in the index, it's Newmont, and just to give you a sense of how small the ownership is of the American public in gold stocks, Newmont's market cap as a percentage of the total market cap of all the S&P 500 stocks is 0.07%.
Right.
It's nothing.
It's incredible how there's people just not in the space yet, which again seems like could be a good time based on where we're at right now.
So if you look at the index, if you look at all of the public companies in America, add up their market capitalizations, the S&P 500's companies, which is 501, represents 80% of all that value.
Right.
And so gold is under-owned. Now there have been times in the past when it was gold as a percentage, say the New York Stock Exchange, which is close to the S&P in terms of total value, was up to 5%.
Right. So
in 38 and then in 67 again it was 4.5 and it got down to 2. But even going from 0.07% to 2% is a monumental increase.
Right.
So I feel that there is going to be a wave of money moving into this space because we've seen all the monetary easing created trillions of dollars that are washing around in the system right now, and some of that money is going to move in here. I think the cryptocurrencies, the cannabis stocks were clear examples of the impact of all this speculative money wandering around.
Which certainly is what we often find when you have these types of credit cycles where the money gets pumped in, and then once the rates start going up, then we see a lot of the malinvestment exposed. And certainly should we see more decline in real estate or the stock market, that is a lot of money that will be looking for a new home. And certainly I think that McEwen Mining is one of the places that may be a recipient of that. So to wrap up for investors, just an outlook on any key challenges you're facing going forward and what you're really looking for in the next year or so in terms of growing the company.
Currently we have 3 mines, gold and silver mines, and we're building our 4th. So we're in Argentina, Mexico, building in Nevada, and a mine in Canada, in the Timmins area.
Right.
And we also have a very large copper project that gives us huge optionality to copper. So in terms of challenges, we're almost finished building our mine in Nevada. So we have to come out of the gate and it has to operate as we promised.
Right, right.
I got my fingers crossed, my toes crossed on that. But we think we've eliminated that. We're extending our life in Mexico. And in Timmins, Ontario, Canada, we've had a $15 million exploration program this year, and we'll probably do the same next year. We've had some very encouraging results. And the mine there we've got to turn its resources into reserves.
Right.
But we're finding, so I want to get into the S&P 500. What's it look like? To me, we have to have a company that's producing 600,000 ounces of gold a year with a pipeline of new production that could take us to 1 million, probably 4 years after we get there. You want to have your cost in the bottom half of the cost curve for the industry,
right. And
you want to have an average mine life of 9 years plus. And I think with that, we're going to have to do some M&A.
Yep.
Because we'll go from 170,000 ounces to 200,000 ounces next year. We have 3 projects that if they come through in the next 3-4 years, will increase that production by 50%. Mm-hmm. But I still have to get to 600, so I have to put a couple of companies together.
Right.
Now, when I bought Wheaton River with Goldcorp, I didn't pay a premium really. I paid 7% premium. And so one of my challenges is trying to convince someone to come together at market, right. Like Barrick and Randgold just did. And when I bought Wheaton River, we did that. So the large interest in the company gives you a financial discipline, mm-hmm. Because you really don't want to dilute the value of the shares when you have a large interest, and the only way you get compensated is through a higher share price.
Which I think is really valuable, especially with so many of the things we see going on in the market where someone's standing behind the investment, which don't think it's possible to overstate the importance of that. So it's great to have you on here today. I appreciate you stopping by, and perhaps just lastly, you can let folks know the best place to find you and keep updated on what you're doing.
Well, you go to our website, McEwan Mining. If you want to know more about our projects, we had a online September 6th. We did a very comprehensive review of all of our operations, had senior members of management addressing each of our operational sites, our exploration stories, talking about the large copper optionality.
Great.
And that'd be the place to go.
Okay, well, it's a pleasure to have you on the show. Thanks so much for stopping by, and best of luck going forward.
Thank you very much for your interest.
And Rob, for all the folks who are out there watching, with all of your great experience, what is the one investment tip or piece of advice that you'd like to pass along to investors right now in this challenging environment?
I see a lot of stories coming through our office. I welcome them in. One of the first questions I ask is, how much do you, management, have invested in this company? I mean, if you're talking a really good story, are you committed to the story, or you just have it all on options? I'd also just look at where we are in the timing. You don't want to be buying at the top. Right now is a good time to be looking at investment. One third one, if I may, is got to do, if they sold royalties or they sold metal streams, I'd look to another company. I think they've given away the future.
Okay.